Welcome. Tonight we're diving into a crucial question for every investor. When can you actually trade on the US stock market? Understanding market hours is more than just knowing when to log in. It's about timing your moves, reacting to news, and avoiding costly mistakes. The main US exchanges like the NYSE and NASDAQ have set operating hours. They're not open 24/7. Most trading happens during these hours, when liquidity is highest and prices are fair. Outside these hours, risks and volatility can spike. For beginners, sticking to the main session is usually safest. Imagine a company releases big news after the market closes. If you don't know about after-hours trading, you might be surprised by price jumps the next morning. Knowing the full schedule, from pre-market to after-hours, gives you a complete picture and helps you make informed decisions. Mastering the market's clock means you're in control, not just reacting to surprises. This isn't just for day traders. Long-term investors benefit too. Timing matters for company announcements and economic data releases. Place orders at the right time to avoid poor prices. Align your strategy with Wall Street's rhythm. Don't be a passive observer. Be a proactive participant. Understanding market hours is your first step to building wealth. Let's break down exactly when you can trade. The main U.S. stock exchanges, NYSE and NASDAQ, trade from 9:30 a.m. to 4:00 p.m. Eastern Time. This is called the cash session, when most trading happens and prices are most stable. High trading volume means tighter spreads and fairer prices. All times are quoted in Eastern Time, so convert if you're in another zone, like 6:30 a.m. to 1:00 p.m. Pacific or 2:30 p.m. to 9:00 p.m. in London. On some days like Black Friday or Christmas Eve, the market closes early, usually at 1:00 p.m. Eastern. Early closes are announced in advance, so always check the NYSE or NASDAQ calendar. Missing the main window or miscalculating time zones can cost you opportunities. Plan your trades around these hours for the best results. Remember, most investors should focus on this regular session. It's where you'll find the most stability and liquidity. Now let's look at what happens outside these hours. Trading isn't limited to 9:30 to 4:00. There are extended sessions, pre-market and after hours. Pre-market runs from 4:00 a.m. to 9:30 a.m. Eastern, letting early traders react to overnight news. After hours is from 4:00 p.m. to 8:00 p.m. Eastern, often when companies release earnings. Prices can move sharply in these sessions, but there's a catch: lower liquidity and wider spreads. Fewer buyers and sellers mean more volatility and less predictable prices. Not all brokers offer access to these sessions, and some limit order types. For beginners, it's smart to observe before jumping in. Watch how stocks react to news outside regular hours. Understand the risks: higher volatility and less efficient pricing. Extended hours can offer opportunities, but also bigger risks. Build experience during regular hours first. Once you're comfortable, consider exploring pre-market and after-hours trading. The U.S. stock market is closed on weekends, no trading on Saturday or Sunday. This pause lets investors regroup, but weekend news can cause price gaps at Monday's open. The market also closes for major U.S. holidays like New Year's Day, Independence Day, Thanksgiving, and Christmas. If a holiday falls on a weekend, the market may close on the nearest weekday. Always check the official NYSE or NASDAQ calendar for exact dates and early closures. For global investors, time zones matter. 9:30 a.m. to 4:00 p.m. Eastern is 2:30 p.m. to 9:00 p.m. in London, 11:30 p.m. to 6:00 a.m. in Sydney. Daylight saving time can shift these hours, so use a world clock or converter. Knowing the calendar helps you avoid surprises and plan trades. Don't rely on memory. Always verify the schedule. Make checking the market calendar a habit. This discipline keeps you prepared and professional. Stay informed, and you'll navigate the markets with confidence. That's how you build a solid foundation as an investor.